Hello, future investors. Are you ready to take charge of your financial future? Investing in the stock market can seem intimidating at first, but trust me, it's an exciting journey that can lead to financial freedom. Whether you're starting with a little or a lot, your money can work for you. Let's learn how to make your money grow. I'm here to guide you every step of the way. Together, we'll break down the basics of investing in stocks. Remember, knowledge is power. The more you understand, the more confident you'll become. So let's dive in and explore the world of stocks. Imagine owning a tiny piece of your favorite company. It could be a tech giant, a popular retail store, or even a trendy new startup. That's what a stock is. It's a small piece of ownership in a company. When you buy a stock, you're buying a small share of ownership in that company. This means you have a stake in its success. It's like becoming a mini partner. You get to share in the company's journey and growth. As the company grows and becomes more valuable, so does your investment. This can lead to significant financial gains over time. Now, companies need money to grow, right? They need funds for research, development, and expansion. That's where you come in. By investing in their stock, you're providing the capital they need to innovate and expand. By buying their stock, you're giving them the capital they need. In return, you get the potential for profits. These profits can come in two ways. Dividends and stock price increases. Dividends are regular payments made to shareholders. Dividends are like regular payments a company makes to its shareholders. They are a way to share the profits with you. And if the company does well, its stock price goes up, meaning your investment is worth more. This can lead to substantial returns over time. For beginners, I always recommend starting with common stocks. These are the most straightforward and accessible way to enter the stock market. They're like the starter kit of the stock market, providing a solid foundation for your investment journey. Common stocks represent ownership in a company and usually come with voting rights. This means you have a say in important company decisions. Don't worry too much about the technicalities for now. It's more important to get comfortable with the basics. The important thing is to start with what's easy to understand. Focus on learning the fundamental concepts. As you gain more experience, you can explore other types of investments. Diversifying your portfolio can help manage risk. But for your first stock, stick to well-established companies you know and understand. These companies are usually more stable and less volatile. Think about the products and services you use every day. These are often produced by companies with strong track records. Are there any companies behind those products that you believe in? Investing in companies you trust can be a good strategy. That's a great place to start. Remember, the key is to keep it simple and build your knowledge over time. Choosing your first stock shouldn't feel like a guessing game. Take your time and do your research. Remember, you're not just buying a stock, you're investing in a company's future. Start by looking at the company's financial health. Check their website or reliable financial websites for their financial reports. Don't be intimidated by the numbers. Look for key indicators like revenue, profit, and debt. Is the company making money? Are they growing their sales? These are good signs. Understand what the company does, who their competitors are, and what their plans are for the future. Section 5. The market and you riding the waves. The stock market is like an ocean, sometimes calm, sometimes stormy. Understanding market trends is important. Pay attention to the news and learn about different industries. For example, if people are buying more electric cars, companies in that industry might do well. Remember, investing in stocks involves risk. The market can go up and down in the short term, but don't panic. Investing is a long-term game. If you've done your research and believe in the companies you've invested in, stay the course. Section 6. Finding your brokerage home. Now, to buy and sell stocks, you'll need a brokerage account. Think of it like your online investing hub. There are many brokerage firms out there, each with its own fees and features. Do your research and choose one that suits your needs. Some brokerage firms are geared towards active traders who buy and sell frequently. Others are better for long-term investors. Look for a brokerage with low fees, especially if you're starting small. Many brokerages offer educational resources and customer support to help you along the way. Section 7. Taking the leap. Making your first investment. Investing can seem daunting at first, but with the right guidance, it can be a rewarding journey. Once you've chosen your brokerage, it's time to make your first investment. This is a significant step towards building your financial future. This is the exciting part. You're about to become a part owner of a company, no matter how small your investment might be. You'll need to fund your account, which you can usually do through a bank transfer. Make sure you transfer an amount you're comfortable with. Then you can search for the stock you want to buy and decide how many shares you want to purchase. Research the company and its performance before making a decision. There are different types of orders you can place. Understanding these can help you make more informed decisions. A market order buys the stock at the current market price. This is the most straightforward type of order. A limit order lets you set a specific price at which you're willing to buy. This can be useful if you believe the stock price will drop to your desired level. For beginners, market orders are generally the simplest option. They ensure your order is executed quickly. Remember, you don't need to buy a lot of shares to get started. Even a small investment can grow over time and teach you valuable lessons about the market.
And action.
Section 8. Investing for the long haul. Smart strategies for beginners. Congratulations on making your first investment. Now let's talk about building a strong portfolio for the long term. Diversification is key. Don't put all your eggs in one basket. Instead, spread your investments across different companies and industries. Think about your investment timeline. If you're investing for retirement, you have a longer time horizon. This means you can take on more risk. If you need the money sooner, you might choose more conservative investments. Remember, slow and steady wins the race. Section 9. Avoiding pitfalls. Common mistakes new investors make. Investing in the stock market can be incredibly rewarding, but like anything worthwhile, it requires patience, discipline, and a level head. One of the biggest mistakes new investors make is letting their emotions drive their decisions. Don't panic sell if the market takes a dip. Remember, you invested for the long term. Similarly, don't get caught up in the hype and buy a stock just because everyone else is. Stick to your plan and make informed decisions. Section 10. Your investing journey starts today. Congratulations on taking this important step towards financial empowerment. Remember, investing in the stock market is a journey, not a race. Start small, learn as you go, and don't be afraid to ask questions. The more you know, the more confident you'll become. So what are you waiting for? Start exploring, start investing, and watch your money grow. Remember, the future belongs to those who prepare for it. And by taking control of your finances and investing wisely, you're shaping a brighter future for yourself. Happy investing!